Yeah. It's a no-brainer, but hey, you got to know a little bit about it before I go throw money on it, right? You know, there's a few markets that you see daily that you know, they're going to get and then you take it small places. And then, you know, and that process is going to take, you know, life and, you know, all different kinds of branches off. So you might be a stock like a Caterpillar. Well, look at the growth of building and that comes. That's when people are going to say, hey, I'm going to invest in the tractors because there's a major amount of construction going on, you know? Are you kidding? There's plenty of crooks out there that want to take you. They're everywhere.
That game is old. I think he's going to get started, so get settled in. Hi, welcome.
It's 9:30 already.
It is not.
This place is.
Yeah,
Is Mumbai really like a half hour out? You sitting out on like a phone?
it's tomorrow.
I know, but everything else.
Oh, because I looked it up, but it might be. I think it is. I think it is.
And to take notice of it.
Hey, Ray, come on in. I think she's going to get ready to start here. All right.
Okay, perfect time.
Perfect.
Okay, guys, let's go ahead and we'll kick off. We always seem to have a few people that show up a little bit late to these things, so they'll kind of find their way in. But on behalf of everybody here at the Academy, we'd just like to thank you guys for coming out, spend a little bit of time with us. We appreciate that. If I didn't get a chance to officially meet you yet, my name is John Larsen, and we're going to spend about 3 hours or so together. So one of the things I always like to do right off the bat is just kind of give everyone my email address. So I wrote it on the board for you. I would encourage you to jot that down. It's my first name followed by a dot, and then my last name, which is Larsen, and that's at tradingacademy.com. So my role here at the Academy, I'm actually an independent contractor, which means I do a few workshops like this. I just kind of fill in every once in a while to do these. But every other month, about every 6 or 8 weeks, I do a hands-on live in the market options trading class. Options are kind of my deal. And other than that, I'm at home trading my own account. So if you have any questions for me at some point down the road, something you're struggling with or you need help, feel free to reach out. I'm more than happy to help you in any way that I can. Even if you're looking at a trade, I'm not a licensed broker. I don't want to get into all that. But trader to trader, if you're looking at something, you had some questions, I would certainly tell you what I would do if I was in a similar situation. So feel free to reach out if you need some help. Just do me a favor. If you do send me an email, don't make it a 911 email. You know, say, hey, the market's going to close in 2 minutes. What do I do? Because if I am doing an options class that week, I won't be able to get back to you right away. But I do return all my emails, and truly, I'm more than happy to help you if I can. So if you have a cell phone, if you would just kind of take a second and make sure that thing's on silent mode. Your neighbor will appreciate that. Obviously, I understand we all have stuff going on. We're all busy these days. If you need to make a call or take a call, feel free to do that. But if you would, just for everybody's sake, talk on the phone outside the room. And then when you're done on your phone, come on back in and grab your seat again. I'll actually leave this side door kind of ajar so you can kind of come and go as you need to tonight. I'm going to give you a break officially about halfway through or about 90 minutes in. But if you feel like you need a break before scheduled time, you don't have to raise your hand and ask permission. Just get up and let yourself out. We'll keep it kind of casual and more conversational. And I always encourage questions, especially if I'm not explaining myself real well. Just kind of back me up, say, whoa, wait a second, I didn't get that, go over that again. I'm more than happy to do that for you too. But I do tend to get off on tangents, and I'll get down the rabbit hole, right? So just kind of help me stay on track. If you're going to ask questions and participate, ask questions about what we're talking about on the screen, right? But if something else jumps up that you need help with or something occurs to you, jot it down on your notepad so you don't forget. and then let's connect when we're all done. I'll actually stick around as long as I need to make sure you have all your questions answered tonight. My teammates out there, they're all very well versed in all things Academy related. They're also available to answer questions for you. They're coaches here at the Academy. They actually help some of our students build out training plans for themselves, and they've worked with hundreds of students. So again, if you want to connect with one of them, do that. And then before you leave, connect with one of them and pick up a thumb drive. I don't have one handy, but we provide you with a thumb drive at the end of the workshop. There's some great content on there, some stuff about our methodology, our core strategy, some of the content that I covered tonight on there, and then actually for those of you that move forward with us, there's actually a homework assignment embedded down there. If you want to get home, you can actually get started on that tonight. So before you leave, make sure you connect with somebody out front and pick that up, right? It's a little thumb drive you plug in the side of your computer. So here's what we're going to do, and I'm pretty much going to go in this order. First thing I want to do is just kind of help you understand why you might not be reaching your shorter-term trading and then also your longer-term investment type goals. So we're going to talk about trading and investing from both perspectives, right? Short-term active trading, how to generate a little extra money for yourself every day, a week, or month, or whatever it is. And then also from a big picture, the retirement account type ideas, right? So the Academy's been around for about 20 years. We're very familiar with all the challenges and hurdles and just kind of the frustrations, right, that traders and investors face on a daily, weekly, or monthly basis. So I'll go through what some of the common challenges are, and then I'll show you how the Academy trains its students to overcome some of those hurdles. And that is to think and execute like a Wall Street trader. So that's actually going to come back to our core strategy. This is a methodology that we actually patented back in 2014 to find turning points on those price charts, on candlestick charts. So how many people are familiar with charts? Okay, great. If you're not, don't worry. We'll get into some of the basic stuff tonight. But I'll show you how that works and what our core strategy looks like. And then obviously towards the end of the night, I'll give you the opportunity to work with us to create your own financial blueprint. So I always tell people we're in the skill set development business, right? Trading, investing, this is a skill set. You learn how to do this just like you learn how to do anything else in life, right? And your blueprint, I always compare that to kind of like working with an architect to build a house. Right? If you were going to sit down and design your dream house with an architect, at the end of that whole process, you'd have a set of blueprints that detailed out every square foot of the place. Right? Just picture perfect, just exactly how you see it in your mind. Now, if you know how to build houses, now that you have plans, you could build a house yourself. You can have a friend build it for you, or you can have the architect build it for you. So we do the same thing, but we do with people's financial house. So you tell us exactly where you are right now, and tell us where you want to be down the road and when you want to get there, and we'll build you out a pathway, we'll build you out a plan to do that. Now, obviously, in 3 hours, there's no way I can possibly teach you every single thing you need to know about trading or investing in 3 hours. You guys understand that, right? Okay, I'd love to give you the big sort of download brain dump thing, but what I will do is I'll share with you where all of our students kind of begin their journey with us, what the next step in this whole process is. This may or may not be right for you, I don't know. But the next step in the process here at the Academy is not another 3-hour workshop. It's actually a 3-day program. The next one coming up is at the end of this month, 23, 24, 25. And this is where we fly a professional trader to this location. And they spend 3 entire days with you taking a deep dive into everything we covered today and then some. Now, what students always tell me they like so much about this particular program is at the end, when you leave on Sunday afternoon, you're actually going to leave with a written trading plan. A plan that you can actually put in place and actually start to get some traction with. So you might want to jot the dates down. I'll put them on the board. We just call it our market timing program. And the next one coming up happens to be a Friday, a Saturday, and a Sunday. That's 23, 24, and 25. Those classes go from 9 o'clock in the morning until 5 o'clock in the afternoon. So we cater in breakfast, we cater in lunch for you. It's all done really, really nicely. There's a huge workbook that follows along with the instructor all 3 days, step by step, so you cannot miss a beat. And then again, you'll leave actually with a written trading plan. Now, I should tell you the retail tuition for that one is $1,000. And again, after 3 hours with me, you'll know if that makes sense for you. Now, typically what happens is, after 3 hours with me, you're going to come to one of 3 conclusions, right? Some people are going to say, hey, thanks, but no thanks. Right? And maybe you don't like me, or you don't like our location, or You know, whatever. You don't like trading investing. That's okay. Let us know. We'll send you home some great stuff. And if it's not right for you, tell somebody else about it, right? That's outcome number one. Outcome number two may be, we sell out all of our classes. We actually have waiting lists to get into all of our classes here at the Academy. And because of that, we're oftentimes a little bit particular about who we decide to work with on a long-term basis. This obviously has to be a great experience for you. It also has to be an amazing experience for every other student in class with you. So I'm sure everybody can think back to some type of classroom experience you had somewhere along the line where there were one or two people in the class that were a lot more interested in terms of letting everybody else know how smart they were instead of being focused on what the instructors had to say. So those types of people are not in our classes, right? Actually, what we look for in a prospective student, somebody that we want to work with long-term, that we think is going to be a good trader or a good investor, there's three sort of characteristics, and these are worth jotting down too. The first thing we look for is we look for people that are coachable. And believe me when I tell you, not everybody's coachable. But every single one of our students gets aligned with an education counselor. Here at the Academy, we call our counselors coaches. So just like in athletics, right, the coach's job is to keep you on task, keep you focused, keep your skill set developing in the right direction, but more importantly, move you towards your goals, right? So you've got to be the type of person that can listen to a coach. And for a lot of people, that's just a real challenge. It might mean, actually, for some of you, maybe letting go of some of the stuff you've been doing up until this point. And again, that's just a hard thing for a lot of people to do. I'll give you an example of that. How many people have never traded before? Just brand new. Just a couple of you? Okay, so I was hoping every hand would go up. Does anybody know why I personally like to work with people that are brand new? Why is that easier for me?
They don't have any way to sit.
Yeah, well, they don't have any bad habits, right? I don't have to undo anything. Let's face it, everybody comes out to these events for one or two reasons. You're here because you've never done this before, you kind of want to check it out, right? And see if this is the thing that will help you meet your financial goals, which, by the way, that's the right way to go about it, right? Get the knowledge first, then develop your specific skill set, then put risk capital after your ideas, right? Most people go out there, they trade the markets first, they whoop it up, they lose some money, they figure out this isn't so easy, then they come through the Academy to learn how to do it the right way. So if you're here and you're new, you're in the right place. Learn how to do it the right way first, right? Get off the bad start. So here because you've never done it, want to learn how, or maybe you're trading right now and you're just not getting the results that you want. Right? If everything was perfect in your account, you would not be here for 3 hours with me tonight. So maybe it's something like consistency, right? Where your batting average isn't quite where you want it to be. Or maybe it's a dollar amount thing where you can't get over a certain hurdle. You know, there's a threshold you just can't get past on a daily, monthly, or quarterly basis, whatever it is. So if you know just enough to be dangerous, you know what I mean? If your glass is sort of half full, what we're going to ask you to do at the Academy is dump it out, right? Stay open-minded, right? Be adaptable to a new way of thinking about how the markets work. It may be ways that you hadn't necessarily considered, right? There just might be an easier way to do what you're doing. That's coachable. Another thing we look for in students is we want to work with people that are disciplined. And then just like being coachable, believe me when I tell you, not everybody's disciplined. But every single one of our students eventually has a written training plan. This is literally a step-by-step process that you're going to use to find absolutely the best entry price. So no matter what you're trading, stocks, futures, forex, options, whatever it is, after 3 days with us, you'll know exactly what price represents the best price to get in. You'll also know if that trade's not working, where to get out, stop the losing on the trade, limit your losses, right? Manage your risk correctly. You're also going to know after 3 days with us what price represents the best price to get out and take the money and run. You're also going to know the relationship between all three of those levels. So you've got to be the type of person that can follow a set of rules. And again, for a lot of people, that's just a real challenge, right? So you got to be this. But think of your trading plan, right? Your individual plan. Think of that thing kind of like an employee handbook, right? You ever start a job someplace, first week on the job, they give you the rules and regs of the company, right? What happens if after 1 week on the job, Friday afternoon, you sit down with your new boss, and you have managed somehow to break every single rule in the rule book? How's that meeting go with your boss? Probably not real well, right? Now, in the world of trading, obviously you don't have a boss you're accountable to. In the world of trading, ultimately, who are you guys most accountable to? Yourself. So if you tell us what you're trying to accomplish, and we build you out a game plan, we build you out a rule book to accomplish it, and you say, hell with that, you wad it up in a ball, shoot it in the waste bin, get out there, whoop it up, do your own thing anyways, and then lose money, do you look back and blame the academy for that? Or do you take responsibility for that? So for us, it's just easier to work with people that are just sort of naturally disciplined. You just kind of follow a set of rules. And then another thing we look for, I always put decisive on the list, because when all the rules line up, you gotta have the ability to click the button. And a lot of times when there's money on the line, things look a little bit different to people when the bullets are actually flying. So you gotta be able to click the button. So you might not be interested in what we're doing, that's okay. You might not be a great fit for what we're doing here. That's okay too. We know we can't help everybody. Or maybe this is exactly what you've been looking for. We decide you're gonna be a good fit for the students we're working with right now. We'll send you home with some homework and you can actually start building on your individual plan right now, your blueprint, right? Worst case scenario would be you come out to an event like this, you spend 3 hours with me, you've got some sort of financial problem to solve, and then when you have an opportunity to do something about it, you don't do anything about it, right? Let's face it, financial problems typically don't get better on their own, they get worse. And when things start to unravel and get worse, they can get worse in a hurry, right? So whether you ever do anything with the academy or not, that's sort of a whole separate issue. But will everybody agree, since we're all here looking for some sort of change, that as of tonight, you guys are going to do something different to get the results you've been looking for? Yes? Okay, very good. Now, I should tell you, just because you come through 3 days with us, does not mean every single trade you ever make is going to be a winning trade. Trading is not about being right all the time. That's also a real challenge for a lot of people that absolutely have to be right in everything they do, that are perfectionists. Right? Trading is about managing risk correctly. But that's absolutely one of the best things we do at the academy is we teach good risk management principles. But if you never take any risks, there's no what? Yeah, there's no reward, right? There's no other side. So you've got to be able to click the button, right? Now, we like to teach by example. We're a hands-on academy. We have hands-on live in the market classes that we host for options traders, for stock traders, for futures traders, and for Forex traders. They take place in a classroom just like this where all the students are in front of a live computer. Right, so I'm going to show you 3 different types of examples tonight. The first one's what we call a pro pick. And a pro pick at the academy, that's a trade recommendation that we publish, our in-house traders publish on a daily basis. So on any given day, if you're not sure what looks like a good trade, go over to the website and take a look at the pro picks. We do those trade recommendations for options traders, futures traders, Forex traders, and we do those for stock traders, right? And we also do those for all different time frames. Super active short-term trades, as well as big picture longer-term trades. I'll also show you number 2 there, trading results. And the trade results come right out of our live trade labs. We actually not only have the classroom experience here at the academy, but we actually give our students the ability to log in from home, once they're home trading their own account, and actually watch one of the instructors here trade their account live in the market. Now, we put our money where our mouth is. All our instructors trade live real money accounts. Right? We get audited by the corporate office in LA twice a year. Every 6 months, we send them all our brokerage statements. They want to know not only are we actively trading the asset classes that we teach in, but also that we're profitable in those asset classes. So you have the ability from home to look over the shoulder of somebody that actually does this for a living and watch them go through the process of finding trades, placing trades, managing the risk, and then eventually exiting the trade. But because the bullets are actually flying, every day is a different day, and not every trade is a winning trade, what I hear from students is, man, that's an awesome way to learn. I'm at home trading my own account. I get to actually watch somebody that's doing it. And then I'll show you student testimonies. So those come from students just like some of you guys. Brand new, never done it before. They took the trade plan we built out for them in a 3-day. They took our core strategy, our methodology, they blend those 2 things together, and they start to have some success. So at some point, maybe one of you will send me an email and say, hey, John, check it out. Just had my biggest options trade ever. Share this one with your next class. Well, if I'm going to share a trade that you send me, that you made based on what we taught you how to do with a class of mine, it has to be a real trade. So what the corporate office is going to ask you to do is just back it up with a copy of your account statement. Now, they don't want to know how much money you have in your account. They don't want to know what your account number is. They just want to make sure that what we're sharing with students are real money trades. And then what I'm going to share with you tonight is copyright. Right? We took a lot of time to put the content together for you, so we just don't want it to show up on the internet someplace. So if you would, just no picture taking, no audio, no video recording. But don't forget, I'm going to send you home with a thumb drive that has a lot of this content on it. Okay, so that's what we're doing here. We're an academy. We have lots of different classes on all this stuff. So why are you guys here? And I know I talked to a couple of you before we got started. I know some people mentioned they're primarily focused on income. So tonight when I talk about income trades are short-term trades. That's how you make $2, $3, $4, $500 a day, right? Whatever it is that you're after. So it might be supplemental, meaning part-time, in addition to what you're doing with your full-time job. Or it might be your primary source of income where you turn trading into a business for yourself. So I'll give you a good example of supplemental income. Towards the end of last year, I worked with a couple that had just recently retired, and they were out of our Irvine office down south. And between the two of them, husband and wife, they were collecting about $2,500 a month in Social Security benefits. And over their working years in a 401k or an IRA, they managed to save about $300,000 in a retirement account right now. Living in Orange County, $2,500 a month, not enough to get it done, or at least live the lifestyle they wanted to. They were scared to death they were going to run out of their retirement account if they started taking money out of that early. That was the legacy for the kids and the grandkids anyways. They wanted to keep that intact and keep that growing. So they came through the academy specifically to learn how to income trade. Not trying to knock the cover off the ball and make $1 million. They literally just wanted to make a few $1,000s a month part-time to kind of loosen things up around the house. So the trading plan that we built together for them, because they didn't have a lot of money to start with, we put together a leveraged asset class. And I'm going to talk about those tonight, but specifically the futures market, and then real specifically the crude oil market. So in the morning, for about 90 minutes, together as husband and wife, when the price of crude oil is moving around, that's what they're buying and selling. Now again, my point is they're doing it part-time, and they're just trying to make a little bit of money every month. So anybody in that camp where you're kind of here because that's your goal, you want to make just a little, okay, very good. If that's kind of what you're thinking, if you got a full-time job and you're just trying to do this kind of part-time in this program, we'll build you out a plan to do just exactly that. And then if you're doing this part-time, if you're trading some of the stuff that's open 24 hours, you know, so you're trading at night after you put your kids to bed, or maybe you're trading in the morning before you go to work, or just whenever you can carve out 45 minutes or an hour or whatever it is. If this is your salary, your full-time job, right now it doesn't happen overnight, obviously, but eventually at some point in time, the money that you're generating in your trading account at some point is going to equal what you're making in your full-time job. Right? So then you have some choices. You can either keep doing both and essentially just double your income, or you can quit the full-time job and trade full-time for a living and turn that into your primary source of income. So anybody here because you want to trade full-time for a living? A couple of you? Okay, good. If that's kind of where your goal is, again, we'll build you out a plan to do that. So tonight, when I talk about income trades, just think short-term trades. When I talk about wealth trades, and we kind of turn the page a little bit, wealth trades is big picture stuff. So just think kind of retirement accounts, right? So I meet a lot of people, and I mean a lot, come through the academy. They're 52, 53 years old. They want to retire when they're 65. They're still working full-time. They got 12 or 13 years to go. But they're looking at their retirement account. They realize they are nowhere near where they need to be to retire with the lifestyle they want. So these folks come through the academy. They're not so much focused on the short-term income stuff. What they want to do is grow the retirement account. So they're interested in strategies for growth. The safest way possible, but start to get better rates of return, right? So anybody here, because your primary goal is growing the retirement account? A few of you? Okay, great. If that's more where your head's at than the short-term stuff, again, in this program, we'll build you out a plan to do that, right? And then we call it a wealth bucket, but if you do have a pool of assets and they're growing nicely, how do you protect them? Right? Now, usually the people that come through the academy that are interested in protection are the folks that got burned in 2000 when the dot-com bubble popped, or maybe in 2008 when the subprime mortgage mess blew up, right? And when I say burned, I mean they lost, in some cases, 30, 40, maybe up to 50% of their life savings, right? What takes almost a decade to build gets literally cut in half in about a year, 18 months. So these are the people who say, listen, I do not have time to recover from one of those catastrophes. That's not only financially devastating, right, but what that does to you emotionally and your family, your relationships, then it's not something you want to do twice. So if you got hurt in 2008, right, if you got beat up, what strategies do you have in place right now today with the market at all-time record highs to protect you from another big downturn in the market, right? So we need a lot of folks that are just scared to death that something big is brewing, right? They want to learn how to protect what they have. And then again, we call it a wealth bucket. You've got it growing nicely, and you've got it protected against downside, right? Insured, like you insure your house or your car or your life. Then once you do retire, and you've got that pool of assets, how do you generate income off that thing? Again, in a riskless environment, how do you generate passive income? So we'll show you how to do that too. I'm going to talk about all those things tonight. So just sort of remind me, just show of hands real quick, who's primarily focused on short-term active trading stuff? Okay, and then everybody else, would you say you're primarily focused on the wealth side of things? Who's not raising their hand no matter what I do? Okay. Who wants to learn how to do both? Okay, very good. Yeah, that's a lot of people too. You know, they show me how to protect what I have and make it grow better than what it's doing right now. And if I can earn a little extra on the side, show me how to do that too, right? So, would it be fair to say the market's a little bit of an uneven playing field? Anybody feel like the deck is kind of stacked against a little guy trader? Yeah? So there's two groups of people that trade financial markets, or participate in financial markets, right? There's retail traders and investors. They typically do the wrong thing at the wrong time. These are the people at home trading from their E-Trade account, right? They trade emotionally. They don't practice good risk management. And they end up doing the wrong thing at the wrong time. About 98% of those people end up losing money in the market. The other group of people in the market are the banks and financial institutions, the big boys on Wall Street, right? The guys with all the money, the guys that literally move the markets up and down whenever they want to, and the guys that practice very good, very strict risk management. So look, if we're doing this at home for ourselves, we do not want to do what these people do. If we're doing this at home for ourselves, we want to do what these guys do, right? Now, for every buyer, there has to be a seller. Would that be a fair statement? If I go out and buy 1,000 shares of IBM tomorrow morning first thing, right, I'm buying it because I want the price of the stock to do what? Go up, okay. But look, somebody has to sell me their shares. Those shares do not come out of thin air. There's what's called a float. There's a specific number of shares outstanding. So would it be safe to say if I'm buying the stock because I think it's going up, the person selling shares to me probably has a different view of the future price than I do? They think it's either done going up, it's going to trade sideways, or they think it's going to go lower, right? So when a buyer who thinks it's going up and a seller who thinks it's going down, when those two parties come together and they agree on price, that's when trades take place. So for every buyer, there has to be a seller. So look, I never want to find myself buying something when these guys are selling it, or selling something when these guys are buying it. Instead, I want to be able to align myself with exactly what they're doing and let them do the work for me, right? So for every buyer, there's a seller. Now, would it be fair to say that for every winner, there has to be a loser? Okay. So if you come through the 3-day program, you sit down with your coach, and you tell them, listen, I'm primarily interested in income trading, and you guys build out a short-term plan to be an income trader, right? Short-term, make a little money. And you tell them you're not very, you're risk averse, so the most you want to risk on any trade is $100. You're just keeping your cards kind of close to your vest. So you guys build out a real detailed plan, and sure enough, you get after it on Monday morning, and the first trade out of the box, bang, you lose $100. Ah, crap, right? First trade's a loser. Now, where'd that money go? Because it's not in your account anymore, but where did it go? So our VP of Education is a guy by the name of Sam Seidman. And Sam's got a famous saying. He said the marketplace is just a transfer mechanism. Right? All markets do every day, all day long, is they transfer money out of the accounts of people who don't know what they're doing, and they move that money over to the accounts of people who do know what they're doing. That's all it does all day long, back and forth, right? So if you lose $100, that money's not gone. Money does not vanish on Wall Street. It doesn't go away. It just simply moves around, right? In 1929, for example, when the stock markets blew up and people were losing their life savings, guys like Jesse Livermore were on the other side of those trades. He made over $100 million in that period of time as prices were falling, right? Paul Tudor Jones, Tudor Investment Corp., right? Big hedge fund in New York. He made all his money in 1987. Or George Soros, you hear about his name nowadays, he's a political activist, right? This guy's the biggest capitalist in the world. He finances unrest in foreign countries all around the world. And then when that unrest disrupts their capital markets, he profits from that. He literally destroyed the economy in the UK, right? In the 90s, I mean, he crushed their currency. He made $1 billion in a single day off the Great British Pound, right? Some people say that was the biggest trade of all time. Or Jim Chano shorted Enron stock, or John Templeton shorted the internet bubble, or John Paulson. You guys ever see the movie The Big Short? You know that movie, Christian Bale and Brad Pitt? Great movie, right? So they're talking about shorting. How many people know how to short? Hey, well, look, what we used to always say on the trading floors, when markets go up, they kind of take the stairs higher. Right? That's kind of how things move up. But when things go down in value, they take the elevator down. Right? So if you buy something at 20 and you hold it and it goes up and then you sell it at 30, the difference between those two numbers is your profit. Is that right? Okay, well look, if you buy something first in the world of trading or in the world of investing, that's called a long position. So you can say, hey, I went long XYZ stock at 20, I wrote it up to 30 and sold it, made $10 a share. That's a long position. But you can also have what's called a short position. Right? That's where the name of the movie The Big Short came from. So not a long position, but a short position. A short position has an entry and an exit. A short position has a buy and a sell. But when you're shorting something, you actually do the sell side of the equation first. You sell something that you don't own. And then when it goes down in value, you buy it back at a lower price. So you have a buy and a sell. The difference is the profit, but you did them in a reverse order. Right? Now, if you're thinking to yourself, hey, wait a second, how the heck do you sell something you don't own? That doesn't even make sense. Don't worry, you can. Right? It's an accounting entry at your broker's website. When we have 3 days with you, we'll walk you through step by step exactly how to do that. The mechanics of that are very straightforward. Just know that you can. For tonight's discussion, what I want you to take away is, look, if all you're ever trying to have to do is make money when things go up in value, you're missing out on over 50% of the opportunities out there. Because things go up in value, but things also go down. Right? The benefit to you, though, as a trader, as an investor, is things go down faster than they go up. Right? Just in my own account, where I made the most amount of money in the shortest amount of time, they're always short trades. Right? Think about it. When somebody else finds in the theater, and everybody goes for the exit at the same time, they literally jerk the rug out from underneath prices, and things collapse. Those moves like that to the down, that generally happens because of fear. Right? Going up, it happens because of greed. So just know you can make money going both ways. Now, whether you want to be long something or whether you want to have a short position in something depends on this law of supply and demand. So this is a law just like gravity's a law. Right? Doesn't matter what we're talking about, artwork, real estate, old cars, shares of stock, right? Whatever it is. If there's more demand than supply, which way is the price going to go? It has to go up. If there's more supply than demand, which way is it going to go? It has to go down. So what we want to be able to do on a price chart, specifically a candlestick chart, is be able to identify the picture or the pattern of where this supply and demand equation gets out of balance. Because that's the other thing markets do all day long every day, is they just move from balance to imbalance. But look, when me and you come in and we start to buy something or sell something, we don't disrupt the balance between supply and demand because our accounts aren't big enough. Right? We don't have the volume to do that. But when Goldman Sachs comes in to buy something or sell something, they disrupt this balance. So what we're going to teach you how to do is pinpoint on a price chart exactly where those big imbalance points occur. And if you know where Goldman's going to create a big imbalance to the demand side or to the supply side, you can place your order right ahead of those guys. And you can let them basically just do all the work for you. So here's what I mean by an imbalance. This is a iPhone I got. This thing's probably about a year old now. It's a 6S. So now they have a 7. Huh? I think there's an 8 coming out. Is that right? But the nice phone does every single thing I need it to do. I actually still have the box it came in. If I wiped all my information off this phone, just restored it back to factory fresh, ready to go, I put it back in the box it came in, how many people would give me $1 for the phone right now if I was going to sell it to you? Okay, everybody. That's a no-brainer. Right? Well, look, that's an imbalance. Everybody in the room wants it for $1, right? Everybody jumps on it when the price is low, but I own the phone. So if I own the phone and all of you guys want it for $1, what do I have the ability to do with the price? I can raise it up, and this is the key. If I want to sell it tonight, right? If I want to sell it tonight, how high can I raise the price? Only what the market will bear, right? So you guys ever watch those car auctions on TV? Yeah? I love those things, right? So I love old cars. So something comes up on the auction block that's super collectible, and everybody wants it, comes out of the gates, moves really big, right? Big imbalance, lots of bidders, prices move really far, prices go really fast. Eventually what happens, though, is the higher prices, the bidders fall away. Usually there's just a couple people that really want it. They take it up the rest of the way. And then eventually one of those guys says, no, too rich for me. So So the last guy with his hand in the air ends up owning it. Same thing happens in the financial markets. But those big imbalances, they're not caused by me and you. The big imbalances in the marketplace are caused by the banks and financial institutions. So again, we want to identify what's that picture, what's the pattern look like when they create those imbalances. Then I can use this for whatever my trading style is. If I want to be a super active trader and zig and zag in the Forex market and make a little bit of money every day, I can find imbalances on a small chart. If I want to be a long-term investor, right, and use this for my retirement account, then I'm going to use these imbalances on a bigger chart. And keep in mind, everybody sort of has two buckets, right? I'm not really an art person, so bear with me a little bit. Does that look a little bit like a bucket? Kind of? A little crooked? Okay. First kind of bucket, everybody has what's called an income bucket. So where do you get most of your income from right now? Your job. And what do you do with most of the money you get from your job? On what? What's the first thing that comes out of your check before you even get it? Okay? Well, taxes come out first. Then you got to pay the bank, or at least you got to pay the landlord. You might have a car payment. You might have utilities. You got a food budget. You have all the stuff we all have, right? At the end of the month, the money that's left over, we take that leftover money, we move that over to another bucket. Now, hopefully this bucket is a whole lot bigger, and this bucket's a whole lot deeper, right? This bucket's called your wealth bucket. Wealth bucket isn't what you're using to pay bills. The wealth bucket is the money that you're putting away. You need it to be there when you want to retire, right? So this is, I'm talking about your 401k. Maybe it's a 403b. Maybe you got an IRA set up, or maybe you're just using a savings account. Wherever you're putting your retirement money. Now let's just say, for example, right now, you've got about $300,000 saved up, and your income right now, your full-time job is about $60 grand a year. Now, if you get fired from your job, how do you pay your bills? If you lose this income stream, how do you cover all this stuff? Okay, so in 2009, 2010, when the markets crashed, and people were losing, the unemployment rate went through 10%, people were out of work for years at a time, they're living off the wealth bucket. Now, if you've ever taken money out of a retirement account early, you know what comes out of there a whole lot faster than it goes in. Now, let's just say you got bills to pay, so you can't change up your lifestyle. If you did not have this income coming in, how many years could you take $60,000 out of your wealth bucket before it's empty? So basically what you're doing, you've got 5 years worth of savings. When you start to withdraw it early, what you're effectively doing is punching a big hole in the bottom of the bucket and the money's pouring out of there. You got 5 years, right? Now let's say you don't get fired. Let's say you want to retire. And you want to retire when you're 65 years old. So let's retire at 65. Let's say you want to live the same lifestyle in retirement that you were living while you were working. So you want to continue to live like you're making $60,000 a year, but you're retired from that job. Now, if you're retired, you're going to get some Social Security benefits from Uncle Sam, right? Does anybody know how much those are per month? Ballpark? Okay. Kind of depends on what you've contributed over the years. Most people in the U.S. are somewhere between $1,100 and $1,500 a month. Right? I think the average is about $1,330. But let's just say you qualify for the $1,500. If you get $1,500 a month in Social Security benefits, and you get $1,500 a month for the next 12 months, how much would that be at the end of the year? What's 15 times 12? Who's my math person? 18? So we want to retire and live a $60,000 a year lifestyle. We're going to get $18,000 a year in Social Security benefits. Then that leaves us with a deficit of $42,000. Would that be right? Ballpark-ish? Okay, now here's the million-dollar question. When you retire at 65, how many years are you planning to be retired? How many years are you planning to live off your wealth bucket? Anybody know somebody in their 90s? Yeah, 15 years ago, not many hands went up. Anybody ever see a chart of the number of people that are going to live to be 100 years old? It's absolutely blown through the roof, right, thanks to medicine. But let's just use 85. Right? Let's just say you're going to plan to be retired for 20 years. If you need $42,000 a year for the next 20 years, what's 42 times 20? I can do that one. 840. So what you're telling me is, in your wealth bucket, when you retire at 65, if you want to live a $60,000 a year lifestyle, which by the way, you're not going to be taking the grandkids to Disneyland every month for 60 grand a year, right? you're basically on a budget. But in addition to what you get from Uncle Sam, right, your wealth bucket needs to be about $840,000. Would that be correct? Ballpark? Now, is this a pre-tax number, or is this an after-tax number? Well, most of you put your money away pre-tax, right? And then after it grows, we agree to pay taxes on it? It seems like almost the opposite of what we should be doing. But look, if this is where you are, and this is where you need to be, then what kind of rates of return do you need to start generating now to get you to where you need to be? And what's the safest way to generate those rates of return? And lots of people, don't get me wrong, lots of people don't do anything about a wealth bucket. And I think the number one reason people don't do anything about a wealth bucket is sometimes no matter how hard you're working, at the end of the month, a lot of times there's just not enough money left over to make a significant contribution to the wealth bucket. But that's why a lot of people decide to learn how to trade, right? They get the plan B set up for themselves. They use the extra money that they're generating over here. They don't change their lifestyle immediately. What they do with the extra money they are starting to generate is they use that money to fund the wealth bucket. And then once it gets over there,
inflation either.
Yeah, it's not
You
taking
probably
into
need
account.
double that for
Yeah.
inflation.
Well, inflation's around about 2% right now as of today, right? So yeah, think about that. So that number probably needs closer to be $1 million, right? And again, if you're not making a conscious decision to build your own wealth bucket, then the decision you might be making is, well, I'm just never going to retire. Now, does anybody realistically really want to work every single day the rest of your life? Most people don't work because they love it. Most people work because they have to, right? You might find yourself in a situation where even though you want to work and you love it, maybe it's just physically you can't do it. My next door neighbor's a pilot he was a pilot for American Airlines. The guy's younger than me, but he had a mild stroke a few years ago. Now they won't let him fly an airplane. So even though you may want to work, maybe just physically you can't. And would it be realistic to think, okay, well, listen, in retirement, we're just going to go on a budget. You need nothing but ramen noodles, and we're just going to learn to live off Social Security. Is that even possible? You know, the Social Security system's broken, right? I mean, especially for the younger people in the room, I would not plan on being there in any significant way in your future. We'll talk about that in a little bit, but it's mathematically, it's broken. They put a Band-Aid on it last year to extend it out to 2022, but it's not going to survive, right? This number's going to go which way, you think? It's got to go up. And which way do you anticipate this number going? Yeah, that's the only way it's going to stay solid. Those two things have to happen, right? So again, only real option we have is to learn how to do this and learn how to do it the right way, right? So whether you call yourself a trader, right, making income, or whether you call yourself an investor, right, manager in a retirement account, the difference between those two things is time frame. If I buy something right now at 20 and I sell it at 30, 10 minutes later, well, that's a trade. But if I buy something at 20 and I hold it for 6 months and then I sell it at 30, well, that's more of an investment, right? So it depends on what we're after here. Is it income or is it wealth? So these are candlestick charts, right? So every one of these red or green bars is called a candle. So you can find these charts at any online broker, Scottrade, E-Trade, Schwab, whoever you happen to be using. Type in the symbol, you pull up a chart. Every chart you ever look at, regardless of where you get them, online, from your broker, wherever, the horizontal axis is always time. The vertical axis of the chart is always price. So look, what varies on these charts is the amount of time it takes to create one of these candles, right? So look, on this chart we call it a daily chart because every red or green bar, every candle here represents 1 day of time. So this is the last 100 days or so of activity. So that's a time frame, that's a chart I would use if I was making decisions over here in my wealth bucket, right? It's a bigger time frame. But if I'm an income person, if I'm like that couple trading crude oil, they don't care where crude oil is going to be in 100 days. They care where crude oil is right now this morning while they're buying and selling it between 8 o'clock and 10 o'clock. So they're going to use a much shorter time frame, right? In this case, each candle here represents only 10 minutes of time. So part of what we do in the 3-day program is not only help you learn how to read these charts, more importantly, identify where the turning points are, but we'll also help you figure out which time frames you should be using based on what it is you tell us you're trying to accomplish. Are you more income-oriented, or are you really more wealth-oriented, right? That's going to be a difference of time frame. Now, also, what asset class are you going to trade? Right? People always tell me, well, the only thing to trade is the stock market. There's lots of different things to trade online besides stocks. stocks actually, for most of you, are probably the least advantageous asset class to trade. Right? When you're trading stocks, right? You trade stocks through an online broker, right? You tell them how many shares you want to buy, you tell them what price you want to pay for it, you click the go button, and bang, you're filled in about a second, right? Now, the time of day that stocks trade are 9:30 to 4 o'clock Eastern time, so 6:30 to 1 o'clock out here, right? So if you're working full time, sometimes it's hard to trade stocks. Now, most stock brokers, online brokers, want you to have a couple $1,000 to open up an account and actually start trading. I'm sure you could probably find one cheaper somewhere along the line, but usually the account minimum is about $2,000. Now, when you buy something or you sell something online, your online broker is going to charge you a commission. Right? That's how those guys get paid. So most online brokers charge someplace between $5 to $10 to make a trade. If you're paying close to 10, you're paying way too much. If you're paying 5 or less, then you're on the low side of commissions. But they're going to charge you every time you make a trade. Now, the thing about stocks is the leverage that you have over there, on average, is only about 2 to 1. And as a trader, as an investor, leverage is your friend, right? Obviously, you want the most bang for your buck that you can get out of your trading account, right? Think about it like a real estate example. If you were looking at a piece of property, right, that was $500,000, and you were going to buy it and make a real estate investment, you probably wouldn't run out and pay cash for that place. I mean, some people do. But that's probably not the best use of your resources, right? Instead, what most of you would do is you put a 10% down payment, you tie up $50,000, and then with that $50,000 investment, now you're controlling $500,000 worth of property, right? You control a whole lot of something for a little bit of money. And let's say you're right. Let's say it goes up in value and you sell it at $600 a year later, so you made a $100,000 profit, but you didn't make 100,000 tying up $500,000. You made 100,000 by only tying up 50. So you benefit from the appreciation of the whole asset, but you control it with a fraction of the price. So look, in the stock market, the leverage they give you is only 2 to 1, which means if you had $5,000 in your account, they'll actually let you buy $10,000 worth of stock. Right? They double your buying power. But look, you want more bang for your buck than you can get in that. That's why what a lot of people, especially people focused on income, they want to learn how to trade the futures market, or the Forex market, or maybe even the options market. So these are all things that you trade online through an online broker, just like you do a share of stock, probably with the very same broker. But here's the thing. When you're trading futures, right, you're not trading shares of Amazon or shares of Facebook or shares of Apple like you're over here. When you're trading futures, you're trading the price of a physical commodity. It's usually something you can touch. So it's usually like the price of oil or the price of gold or the price of wheat. There are hundreds of different things to trade. But here's the thing. Here's why people love the futures market so much. Futures markets are open 24 hours a day. So if you're working full-time and you're looking for something to trade at night that's moving around and the stock market is closed, the futures market's open 24 hours a day. Now, they do want you to have, on average, usually about $5,000 to open an account and start trading futures contracts with an online broker. But here's the cool thing is it only costs you $1 to make a trade. $1 a contract. So versus $10 to trade stocks, it's a whole lot less. But here's the best part. The leverage that you have in the futures market is 20 to 1. 20, not 2 to 1, 20 to 1. That means with that same $5,000 account, instead of only buying $10,000 worth of stock, now with $5,000 in your account, now you can control $100,000 worth of something. Now that something only has to move around a small amount percentage-wise, and that's a huge rate of return over here. Right? 1% of 100,000 is $1,000. That's a 20% rate of return. Now look, of course it all comes back to risk management. That's what trading's all about. But bang for the buck wise, the futures market. Now, anybody trading futures? How about Forex? Usually I get some Forex traders in the room. When you're trading Forex, Forex stands for foreign exchange. I'm willing to bet everybody's made a Forex trade. You ever been on vacation? And you get off the airplane, you go to the currency exchange, and you change in U.S. dollars for the currency wherever you're at. That's a Forex trade, right? One currency against another. Forex currencies, they trade in pairs. It's one against another. So you might like to trade the U.S. dollar against the Canadian dollar. That relationship moves around all day long, every single day. The Forex market is actually the biggest market in the world. It trades about $5 trillion a day. It dwarfs what happens in the stock market, and it dwarfs what happens in the futures market. The Forex market is absolutely enormous. But here's why people love trading. So you might like trading the Canadian dollar. Maybe you like trading the U.S. dollar against the euro. Maybe your favorite pair is the euro against the yen. Again, there's lots of different pairs to trade. But the reason people love Forex so much is it's also open 24 hours a day. There is no commission when you trade Forex. It's literally built into the price that you pay. So especially for you active traders, that's beautiful. The leverage that you have with a